For more on the markets, let's bring in our next guest, Andrew Slimmon, Senior Portfolio Manager, Morgan Stanley Investment Management. Andrew, I want to ask you about Nvidia and its role in this market and a test of sentiment here. This is a company that trades at about 59 times earnings, historical earnings, about 1.5 times the level of the overall NASDAQ, of which it comprises a substantial portion of. Given we saw earnings yesterday, there's a lot that's been made of just the overall AI trend and what the future portends there. How are you thinking about sentiment and some of these mega trends like AI and how they filtered their way into the market?
Sure. You're welcome. Thanks for having me on, Leslie. So, look, first of all, you made a statement that I just want to address, which is you said stock is trading at 59 times forward earnings. And one of the errors,
historical earnings, sorry.
Historical. One of the errors, never forget, stock prices don't care about what's happened in the past. They only care about the future. And the future for stocks is looking pretty bright right now because earnings estimates in general are going up. And I think, and certainly the AI sentiment and the very large companies in the S&P that are very much focused on this, that's where the best earnings revisions are coming. So I think the stock market is acting very rational here in terms of rewarding the best fundamentals, and the best fundamentals seem to be in these very, very large companies. And so I am surprised that sentiment is not higher than it is currently because corporate earnings have come in very strong this year, and estimates should be being raised across the board and for the S&P, and yet they haven't. That suggests to me that there's a dislocation between sentiment and fundamentals.
So then what do you think is creating that ceiling on sentiment relative to what we've seen with earnings and what we've seen in terms of forward projections there? Do you think it's the macro picture and the uncertainty?
Well, I mean, I can make guesses, but I've made a very successful career out of focusing on sticking with companies that are doing well and blocking out the noise. And I think there's a lot of noise, as evidenced your previous speaker. There's a lot of issues that are going on right now that are keeping people from focusing on, in my opinion, the fundamentals, certainly Washington, D.C. being one. But look, I think this is all very good, Leslie, because ultimately, I would argue that, the old saying, bull markets die in euphoria. And euphoria happens when people are just over the moon about stocks, and there's fundamentals don't matter anymore, and they just chase whatever is going up. Jim Cramer has touched on this. And to the extent that people are concerned and sentiment isn't too giddy, that means we're not entering that final stage yet. That's actually good for the extension of the bull market. Ultimately, all these people that are on the sidelines, I think they're going to get pulled in. And we will get to that euphoric stage yet, but we're not there yet, and that's a positive for equity investors.
So you think that the return of the meme stocks and the SPACs and potential IPOs with less profits, I mean, that's not concerning to you in terms of whether or not we're experiencing euphoria right now?
I think there is some of that, but when I look at the sentiment polls, it's very surprising to me that there's more bears than bulls. We're at 2.5 years. We've had 2023, 2024, and now a good year again. Why aren't people more optimistic? They should be. That's the norm. So I think, yes, there are some signs of euphoria, but then there are some signs that we're not quite there yet. Ultimately, I think we will get there. And I do think that it's a great opportunity for investors to stick with companies that are producing results because there's so much focus on so many other things that are pulling investors' opinions away from that.